Hello everybody. So today's suck-on video is entitled Epic Green. Should we rejoice or not? Are we happy about our stocks bouncing, at least if you own them? For me, it was a pretty big day because Tesla and MSTR are part of my top 3 positions. So they're very big positions for me, and the fact that they're bouncing back so hard makes me quite happy, but we have to invest in the market that we're given. And the point of this video is to talk about volatility and talk about how to potentially harness this volatility. And I will end this video talking about Hyperliquid and the HYPE token. That's why you see HYPE, talking about perps, talking about options, futures. I'll finish the video with that. But first, I want to discuss the insane volatility. So the volatility remains insane. It's much more elevated than it's ever been. It's insane to the downside, and it's insane to the upside. As I noted, Tesla, a $1 trillion company, is up 8.5% today. Last week, it had almost 5-6%, down 6% day, something like that, something really bad like that. And so the price drives the narrative, the movement drives the narrative. And you can see, for example, Google is up 5%, and strategy is up 12%. This is a little ridiculous. A lot of stocks are behaving like meme stocks used to behave in crypto. And you also need to look a little closer. If you were to look at, say, a stock like Micron today, you wake up in the morning, you look at Micron, you check again at night, you look at Micron, you're like, okay, the stock hasn't moved much. With after hours action, the stock moved 0.8% up. Is Micron only up 0.8%? Well, if you look under the hood, Micron crashed really hard down to nearly 1,000, more like 1,020. And then it bounced right back really hard. So actually, the swing of Micron is an 11% swing during the trading day. Fear in the morning, epic fear, dare I say, in the morning, entirely gone in the afternoon, replaced by mild euphoria, I suppose, but replaced by an up 1% stock for a stock that has been performing so well this year. This is a $150 billion swing in the value of Micron within just a few hours, just during the trading day. And if you just look at the headline performance for the day number, you wouldn't see that volatility. But if you look at the chart, you see that insane volatility. Volatility is insane to the upside, insane to the downside. So I want to talk about Tesla, I want to talk about strategy, and I want to talk about hype today. So let's go talk about Tesla. Tesla's up 8.5% today. And again, if you look at the chart, I think the better question to ask is did Tesla have any business dipping to 375? Yeah, we just had a weak macro last week. Last week was a very poor week for macro, a very poor week for growth stocks. Rates were up, yields were up. Not rates, but yields were up. 10-year was up. Oil was fearful. There was a little fearful, especially in the beginning, a little fear of the Middle East. And so the stock just traded down 5%, and it gained it all back. And so the market commentators, they look at the price and they try to find a reason for the price. And it seems like X has agreed that this move is because hardware free now can run a FSD 14 version called FSD Lite. And so Tesla can now potentially sell FSD at $99 a month to 4 million vehicles that have hardware 4. I don't know if that figure is the USA or not. My point is, I don't think that this is the news that moved the stock. I think Tesla is way up today because the stock is super volatile and because it had no business dipping to where it dipped last week. And a lot of stocks dipped very hard last week, and they had no business doing that. That's kind of my take. And so that volatility, how do we harness it? How do we make money with that volatility? Well, you can play the options game, but it's a risky game. It's a game about timing. You can sell options, buy them back, sell options, buy them back. How many people do that? How many option sellers are really happy about that? Selling cover calls, collecting, juicy premiums. The problem is that because the market is so volatile, you could lose your stock. That's the problem. You could lose your stock. So my better solution to harness this volatility is to own the broker. I'll get to that in a second. Own the broker. Own the person who enables the sale of derivatives. That's my solution to harnessing this volatility. Let's talk about another stock that's absolutely crazy volatiles. MSTR, the case of MSTR. Weeks of pain. We had weeks of pain. And today, what do we have? Up all day, like smooth, just so smooth today, smooth sailing, way up on a day where Bitcoin didn't move, by the way, roughly the same as we opened in the morning. Bitcoin only up 1%. I use IBIT because of the same market hours as Strategy. Strategy up 12%, 12.6%. Strategy gaining back a bunch of the premium that it lost last week. Last week, Strategy was underperforming many days back to back, underperforming Bitcoin. This week, in one day, it recaptured not most, but perhaps half of that entire underperformance. It recaptured it in a day. So this is just crazy. And of course, Stretch is up 12% today, and that could be because of 6 different reasons that Saylor announced. Saylor announced, if you look at the moves of Saylor in his announcement this morning, there were only 2 very concrete moves. One of them was raising a cash balance to all-time high, and the other one was raising the yield of STRC to 12%, raising the yearly yield. So these were concrete moves, but the rest was signaling. Saying, "Oh, we will keep this level of cash at all times in the reserve. Oh, we will be mindful of diluting the shareholders with the MNAV. Oh, we will consider selling up to this much of Bitcoin." These are signals. This is talk, right? These are talk signal, cheap talk, because he hasn't done it, right? He hasn't done it. It's just talk. But talk in this market, talk is enough to make a stock go up a lot. So I'm not saying people will interpret Saylor's moves as the reason why Strategy is up 12% today. But my guess is that it's the price action who drives the narrative and not the other way around. And so Saylor could have done, 6 times less. Maybe Saylor could have done only 1 measure out of the 6, and that would have led to the same price action. So and sure enough, don't get me wrong, the announcements of Saylor this morning were great, but if you follow this stock as closely as I do, we knew he was cooking, to use a Gen Z term. We knew he was working on something. So that shouldn't have been a surprise to the market, but it was a major surprise to the market. And what's so annoying is that, okay, you look at moves like this, plus 8%, plus 12%. What do you think the odds are that tomorrow we get a red day? I would argue the odds are pretty high that we get a red day tomorrow after such epic moves. When a stock moves 12% or 8%, you're gonna get a mild red day. I mean that would be logical. The volatility is just insane. So let me move on. So my truth, right? This is not the truth, but this is my truth. My truth is that whether you look at Tesla, whether you look at MSTR, whether you look at HIMS, it's funny. It's Tesla, it's MSTR. We're going through epic volatility right now. HIMS is doing okay now, but on this channel I follow HIMS a lot. HIMS went through epic volatility in February of 2026. We dipped to $15. The sell-off was likely overdone. So whether you look at Tesla, whether you look at MSTR, whether you look at HIMS, the sell-off is likely overdone. Will the rebound also be overdone at one point? My guess is yes, absolutely. These stocks will overheat. These stocks will oversell. And why is that? And this is, market commentator Kobeissi letter. I follow his macro stuff. I love his stuff. I think a lot of us like what he summarizes, talking about the VIX here, talking about the volatility, the Nasdaq volatility, the highest in at least 23 years. And of course, MSTR is on the Nasdaq. Tesla is on the Nasdaq. HIMS is not on the Nasdaq. But trust me, volatility in small cap, hyper-growth small cap can be even worse. So the volatility is the highest in 23 years. I used to say this market is crazy. This decade is crazy. I used to say it's about this decade. Well, if you go back 23 years, we might actually get a decade even crazier than the 2000s. The 2000s were a very crazy decade. 2008, tech crash. If this keeps going, this will be a decade crazier than the 2000s even. I mean, we know it's already way crazier than the 2010s. The 2010s were so smooth. I was lucky to be here for the entire 2010, and they were so smooth. Right? It's almost like perhaps we should be careful trusting a book, trusting anything that was written in the 2010s, because it was such a smooth decade. 2020s could be actually crazier than the 2000s, because we have war on, war off, right? How many times, like with the Middle East, frankly, I don't understand anymore any of these headlines on the Middle East. I think Iran has something like 2 or 3 governments. Like I don't get it anymore. Tariff on, I don't get it anymore. I thought we couldn't do tariff, but there was a fear the other day about 100% tariff on Europe because of digital services tax or whatever. And then you have X, of course, Andrei Karpov is saying, X is looking more and more like Reddit by the day. So people are being more and more tribal than ever on X. All this does is create crazy uncertainty. And this leads to the question, how do we benefit from this volatility, from this casino-like behavior? How do we benefit? Well, you have to be the house. You have to be the broker. That's how you benefit. So this is why a stock that has been doing very well is Robinhood. Robinhood has been doing so well. Why has Robinhood been doing so well? Because when stocks move so violently, it's a stock like Robinhood that earns a fee. That earns the fees, payment for order flow, transaction fees, the spread, the spread. If you follow, for example, options, I don't really do a lot of options on this channel, but if you follow people who do options, they don't like Robinhood. They don't like Robinhood because the spreads are so high on Robinhood compared to something like a Tasty Trade or whatever, right? But they make a lot of money. And if you listen to the earnings call, for example, of WeBull or eToro, and eToro is more European-centric, so if you're in the US, maybe you haven't heard as much of eToro, but WeBull has a huge options volume. WeBull has something like 30% of the options volume of Robinhood. So these free neo-brokers, actually, in my view, are well-positioned to benefit from this crazy volatility because you make money no matter what. Now, and in theory, another type of folks who could benefit from this crazy volatility are the brokers themselves. And I'm specifically, not the brokers, the exchanges themselves. And there's a few of them. I'm specifically talking about Intercontinental Exchange. But my issue with those is that they're old, they're stodgy, they have floors of employees, just floors and floors and floors of people, and they're very low growth. And why do I say they have floors of employees? How many? If you add up like the few big exchange companies in the US, how many employees do you have? More than 100,000? Probably more than 100,000 employees, right? I'll tell you something about Hyperliquid. Hyperliquid has 11 employees. 11 in Singapore. It's 11 people, and Hyperliquid is going after the entire market. They define their market for trading. They want to be the home for all of finance. Hyperliquid is the blockchain that was created to house finance. At least that's their roadmap. That's their plan. And Hyperliquid, to me, has been a very impressive success story. Why have they been such an impressive success story? Because the innovation of this decade in finance is the perpetual futures, the perps, as they call them. That's the financial innovation of this decade. Just like, for example, index funds were the financial innovation of Vanguard back in the 90s, right? There's a financial innovation in this decade, and this financial innovation, by the way, is being won by decentralized exchanges. And the leading winner of that innovation is actually Hyperliquid. And so that's why Hyperliquid has been doing so well. And what I love about Hyperliquid, this is what Saylor calls a revenue chain. So it's much easier to understand than a traditional token, because the tokenomics are so easy to get for something like Hyperliquid. It's simple. It's about the trading fees. 99% of the trading fees go to token buybacks and burn, not sitting in a wallet to be spent again later. They are bought back and burn. 99% of the fees made on Hyperliquid. So the trading fees, people betting on these crazy moves with 5x perpetuals, when they lose or when they win, regardless, right, you're going to end up paying fees. Those fees are burnt. 99% of those fees are burnt. And so you end up tracking pretty closely the price of the token to the success and the adoption of the platform. And Hyperliquid is the fastest growing per platform out there. It's the big invention of its decade in which hype leads. And what I love about Hyperliquid specifically is that the fees are earned and burnt at the layer 1 level, Why is this a big deal? Because if you compare to Solana, I've been studying Solana quite a bit lately, thinking about Solana a lot. Why is Solana not going up? Solana is not going up for two reasons. One of the reasons is it doesn't burn as good as Hyperliquid. Now, Solana is trying to burn 75% of the fees, but right now they burn 50% of the fees. That's one of the reasons why Solana is not going up in price. Another reason is because all of the value on Solana is made by the apps, the layer 2s, the apps built on Solana. They make the money. The Radium, the Jupiter, they make the money. The money accrues to the founders of the layer 2 trading apps. This is not the case for Hyperliquid, because Hyperliquid is only a trading app. And people trade on Hyperliquid. Some people overlay, for example, the Phantom wallet. Some people overlay the Phantom wallet over Hyperliquid, and then Phantom will add like a margin of its own. But you still use the Hyperliquid protocol, and the fees are still burnt by Hyperliquid and leading straight to a buyback. So adoption of Hyperliquid actually translate into tokenomics. You do not necessarily see that for Solana. And I think another thing I want to say about Solana, and of course, I've been studying stablecoins lately. The key to finance moving on chain and the future of finance is that you need to have a stablecoin to back it up. For every stock trading on there needs to be a denominator sticking to it. And so one of the big wins of Circle, but perhaps an even bigger win of Hyperliquid, is that Hyperliquid adopted USDC as the stablecoin of the platform. Now, if you know a little bit about that, you know that Tether is the big kahuna, and Binance uses Tether. But if you look at where this is headed, in my view, Hyperliquid is going head-to-head against a lot of things that Binance does. And they adopted Circle, but look at the deal that they signed. And actually, this updated number, I looked into it, it could add more than 160 million. Actually, the numbers I saw are closer to $90 million. $200 million. So 190 to $200 million of money flowing back to the Hyperliquid protocols, feeding the buyback, because Circle has agreed to give Hyperliquid 90% of the yield that they generate holding treasuries, right? The yield they generate holding treasuries, it would transfer 90% of that to Hyperliquid, which will then use that money to do a buyback of the token at the rate of 99%. And to top it all off on Hyperliquid, growth mode may eventually be turned off. So if you look at the Hyperliquid protocol, a lot of new assets are added all the time. And in order to trigger use and trading on the protocol, they have this growth mode enabled. And so this growth mode enabled means that the trading fees are actually 90% off. So as Hyperliquid matures, you could have a lot of trading verticals who see their fees 10x, because growth mode is turned off and you could see their fees entirely 10x. And so it's a matter of competition, right? And there's a lot of competition in the field. A lot of the models I see on Hyperliquid are not assuming that they'll turn off growth mode anytime soon, but just know that it's built in. They could turn off that mode and 10x the fees or 6x. It depends on how you look, but sometimes they look, I couldn't really figure it out. Sometimes they say you could 6 times more fees. Other times they say 10 times more fees. But the fees technically on Hyperliquid could also go up. But Hyperliquid right now is in growth mode. They're competing against a lot of other platforms, and therefore they have low fees and they have these results. And if you look at the result of the token, the Hyperliquid token, it speaks for itself. You may remember the oil hype. You may remember the silver hype. You may remember the 10-10 event. These were all major events on Hyperliquid. A lot of traders placed really big trades, especially for the silver rally of, was it February of this year? This generated a bunch of fees. And these fees led to a bunch of buybacks. And this is why, when you look at, for example, Hyperliquid compared to Bitcoin on roughly the same period, well, this is a little longer, but if you just, I zoomed. This is not longer, I zoomed. If you look at Hyperliquid, so Hyperliquid in January 2026 was $25 a token. Now it's $66 a token. Okay, but look at Bitcoin. Bitcoin was, 90 to 100,000 back in January. Now it's 60,000. So Bitcoin's down 43%. Hyperliquid is up 200% over the same period. But unlike hype, right? It's funny because the token is called hype. In my view, a lot of the success of Hyperliquid has to do with their buybacks, with the fact that you have perpetual buybacks. The fees are burnt. So there is a buyback that is always there. And the more the platform is successful, the more the token will be bought back by the protocol. Very similar to Apple stock. Very, very similar to Apple stock, right? If that's kind of how Apple stock has gone up so much is because of buybacks. And if you compare a Hyperliquid to, say, Bitcoin, if you look at the chart, so this is the overlay. This is Hyperliquid over Bitcoin. The performance is even more stellar. We what is it? We nearly 3x. Yeah, it's roughly that. It's exactly a 3x Bitcoin. So the performance is 3x Bitcoin. So it's a very interesting token. I'm doing more and more research. Expect another video on Hyperliquid. I'm doing more and more research on this one. But to me, this seems like a solid bet on volatility and on the market continuing to be a casino, which it has been so far. So anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please please subscribe, follow me on Patreon, follow me on X. Thank you for watching and have a wonderful day.